It's just,
Yeah,
although
Dan
it does
French.
half of my other work.
Yeah, for sure, for sure. Yeah, you got it, Dan French.
All
Um,
right.
and you go by
We,
Daniel.
yes, yeah.
Yeah, Andy Grove, by the way, is one of my business heroes. I've read a lot of his uh, works, written works.
I'm sorry, who's written works?
Andy Grove.
Oh, Andy Grove. Oh, yeah, yeah.
Yeah,
He very good. Inventor of the OKRs, and
yeah,
he
yeah.
had a great management style. Um, so we are now live, and I was just going to comment. Your name is Dan. My name is Daniel.
Mhm.
Just by happenstance, I happen to have 3 out of 5 speakers in my club this in January are also named Daniel. Did not
Oh.
plan that, but it looks a little weird when I send out the emails and all the upcoming speakers are named Daniel.
Maybe subconsciously you were searching for Daniels and you just didn't
You know,
know.
that happened to me when I hired interns at Intel as well. Anyway, different
Yeah.
topic. Let's start the
Okay.
show.
Sure.
So, welcome to the Alternative Investing Club show. This is a show where we interview alternative asset managers and alternative asset funds in order to find out what their strategies are and how they're operating. We bring that information to you so you, as a club member, can invest on your own. Or if you're interested, you can check out the Alternative Investment Club Fund, which allows us to pool our capital as a group and to go into larger semi institutional and institutional style investments. My name is Daniel Homlin. Today we have with us Dan French. Welcome to the AIC show.
Daniel, thanks for having me. Pleasure to be on.
All right. So we're just meeting for the first time here, although I've seen you on LinkedIn a fair amount.
Mhm.
Tell us a little about what you've done in the past, and then we'll go into your recent changes.
Yeah, I would love to. So been in commercial real estate for 20 years. Started off in my, around the 24 years old and going into small deals. These are 4 unit buildings, not even actually categorized as true multifamily. I think you have to be five and above, but we consider multifamily investments. And, so we had about 25 of those together in a small partnership with um, people I'd grown up with and known very well. This guy Pete, and another my mother friend Rob, and so we were really getting after it, thinking in 2005, 6, and 7 that we were really smart, and we gathered this portfolio. And at that point, that seemed very big to me. 100 units together in a partnership was enormous.
Yeah,
And
nothing to
then
sneeze at.
before you knew it, though, we were in trouble really fast when the GFC hit because when you're young, you try to make moves, and we made all the traditional mistakes. We were the leverage was way too high. We didn't really know how to operate well. We had no capital reserves really to speak of. We were just kind of being very acquisitive and trying to make things happen. And so when the GFC hit and people stopped paying rents and they lost their jobs, I mean, the impact to us was very severe, very very fast.
Mhm.
And it forced me to, though, in a good way, to get very very hands on operationally. Not that I hadn't been prior, but really this was like do or die.
Yeah.
I'm there leasing my own apartments, unfortunately doing my own evictions, doing my own unit turns and sleeping in vacant units at some points. I mean, just really scrappy stuff. So that's in my DNA. I know real estate from the ground up.
That's great.
And yeah, yeah. Well, it's great now talking about it, but during the time it was very, very painful and very stressful. But and I also had personal recourse on many of the loans, so
Mhm.
my credit really was shot for a very long time. So I know the whole entrepreneurial journey. But the good thing is we kept fighting. A lot of people just gave up and went bankrupt or got foreclosed on everything, and we fought through it all. We worked it all out. Didn't make any money, but preserved our ability to go into the future without a bankruptcy and all this stuff. And I think did the right thing.
A lot of
And
people in the GFC didn't escape bankruptcy, so
yeah,
good
I
for you.
mean, it was on the knife's edge for a while, um, but you learn so many lessons, and that's why it's important to make moves in real estate. Even when you think you're not ready, as long as you have the grit to power through things, you're gonna it's going to accrue to your long-term mindset and your ability to make moves going forward. Now, hopefully read books about what not to do so you would try to avoid it, but you're going to
Was it
make some
easy
mistakes.
when you were first getting into that partnership? Was it easy to for you to do that? when you bought your first fourplex, or did you suffer from a little bit of engineering-itis, which is, a lot of people in the Intel real estate club, now alternative investing club, they're very analytical. Me myself, I think I took a year before I actually pulled the trigger and started investing. Um, what was that like for you?
Well, that's actually probably pretty prudent. I think prudence is important as kind of a virtue, to be, looking at things before you dive in. But for me, it was really, it just hit me, like, the opportunity hit me, and I said yes almost right away. And maybe that was a specific moment in my life, or the person who brought me the opportunity. So, combination of those factors. It was brought to me by someone who I had known for basically my whole life. So from the time I was 7 years old until I first invested with Pete, who I'm still a partner with. You have some friends that might bring you an opportunity, and you're like, no way, absolutely not. And then you have other friends, you're like, wow, you know what? This person's so driven, has such integrity. I know good things are going to happen here. I feel confident. And his brother was the same way. So between that and something in my heart where I was like, you know what, real estate is one of the best, most tried and true generators of wealth, right? So I knew at that point I was in public service. That was my passion. And I chased that for a long time throughout my 20s. So for 7 years, I was an elected official in my hometown. Knowing on a public service salary, you're not going to make any real money. You're just barely going to pay for your life. And I knew I had to do something to create some wealth, because I wanted to have a big family someday, which I now have. I have 4 kids.
Excellent.
And so for me, it was a pretty quick yes. And now, mind you, I also thought it was going to be much more passive than what it became.
Mm-hmm.
So I thought I was going to be more of a passive person, investor. Mailbox money comes in, I'm happy. I'm high fiving, and I see my wealth growing. And then for a couple of years, it kind of seemed like we're on that path. But then, of course, the economy changes, and then the whole thing changed overnight, and it got really intense. So
kind of funny how so many people who think they're setting up passive income realize that they're like, I hear so many investors say, hey, I'm retiring from my job, going into real estate. And then they realize at the other end that it's, 50% more work than their job ever was in order to keep on top of the real estate, especially if you're a hands-on person. So I always kind of laugh when I hear somebody say they're retiring through real estate, because unless you have a couple of million in it and it's generating regular cash flow, you're probably not.
Right. Or you're one black swan away from the cash flow disappearing, like it did during COVID. No one was distributing cash.
Yeah.
And then if you have floating interest rate, stuff, no one's really distributing on those deals because they're trapped.
Yeah. I have had a couple of friends who have been able to replace their income with just 2 or 3 purchases.
Wow.
Of smaller properties. And that's always kind of interesting. I think of Kumar Kunnel in particular, who was up in the Seattle area. But
that's great.
So it can happen.
Yes.
Now you are going back to you did work at a large firm previously. Is that correct?
Yeah. So that middle part of the story is actually way better, and so many blessings that came out of between 2011 and 2019. I joined full time a firm that same business partner. His name is Pete. He's a founding partner. I was considering myself a founding partner, but I wasn't quite at that level, right? Of the founder. So, but I joined very early days, 2011 to 2019. We bought $2 billion of total asset value, really focusing on Florida and Texas. We did a couple of one-off deals in different states like Arizona and Colorado and actually Idaho, but really focused on those 2 states, 17,000 apartments. In the beginning, very much bank-owned, physically, financially distressed deals that we were taking straight from the banks and just doing for all the capital rehab programs, really heavy value add type plays, sometimes starting off in tough neighborhoods, but then eventually elevating to buy a B- deal to a B+. And it was a great run.
What is that like? How do you actually get the volume in order to purchase $2 billion worth? Was that the after repair value, or I assume it's the after repair value, right?
That was.
Okay.
Right. So we've returned almost $1 billion to investors of investor capital. Yeah.
Wow.
So and it over a 2x equity multiple, 22% net IRR. So very, very well regarded team and track record. How did we get the capital? Credit to Pete. I mean, he had wonderful traction early on to have discretionary capital that we were able to move really fast, and the brokers loved us. We were one of the first groups in Florida that got reactivated. So oftentimes, and the banks too, we were known to be a group that closed. We had ready capital, and we were ready to go. And then we operated really well. Yeah, we built a vertically integrated, and that just compounds. It's reputation so important, and especially in a market that's more on the downside, because good buyers stand out even more. When everyone's a good buyer, like that's pretty easy. Like 2021 or 2022, when people could just raise money in 24 hours, that's a way different mentality that you have to have. Or
what sort of market
right
environment you think we're heading into in 2025? What do you see as the challenges of 2025?
Well, yeah, I just posted on LinkedIn the other day, and a couple people hit me up on this that I completely agree with me. But look, I'm not the first to say it, but I think that this extend and pretend phase is going to be finally over. I think the prognosticators have been saying that for a while now, but it's, to me, with the Fed signaling that they're going to slow down, so the markets were pricing in 4 rate cuts next year. Now they're indicating that they're just going to do two. Help's really not on the way, and NOI is still struggling. I mean, we're still absorbing in almost every market. You're still absorbing all this massive supply, and
Texas and Florida. I've got to imagine your insurance rates have skyrocketed.
Yeah, so your OpEx has gone up, and there's no help on the way there, right? The wages are not going down, and insurance is not going down. And then your rent growth is not there, and the interest rate environment is not going to save you. So what's going to happen? You're either going to sell on a fire sale, and it's going to be a fully marketed process, or the bank's going to come in and put you over to
repo
special servicing. Yeah, exactly.
Yeah.
So that's a great, wonderful time for someone like me who has a deep background in this distressed, heavy value add. Like, that's where I think more alpha is created in real estate, when a lot of other people are just going to be too scared to do those 30% occupied deals. To me, that's where I salivate. I'm like, yes, this is perfect. Let's go do this. Let's execute a CapEx program. Let's have some, non-traditional ways of compensating our team to do a great job on site. And I know that playbook very well.
So the highly distressed assets is the playbook that you're following now that you've left your large firm. Is that correct? You've created your own company and you have a partner, and what's the name of the company?
Yeah, I'm calling it Excelsior LLC. I mean, it's just it's an entity that I can use to sponsor deals. And I'm working with a couple different partners, but I'm scanning the market, and I'm being super patient. So I don't have any need to do anything. I'm not raising a fund, because when you raise a fund, you kind of have you get forced in some ways to deploy, and that scares me. I just want to be super patient, very selective. Yes, I departed from my firm. By the way, I was CEO there from 2016 to about 4 months ago. Super amicable departure. Love my partner still. I love everything he's created, and I feel very attached to it still. Like, I'm still there as an advisor to help them out. But I'm on my own and exploring opportunities. And one big one is real estate, and within real estate is to sponsor deals of highly distressed assets.
What other types of assets are you looking at?
I'm looking at launching. Well, there's a lot of ideas I have around the blue collar.
Yeah. I saw that in you. I want to find out what that is from you. What's the vision and the strategy there?
Well, I will describe it to you, and if anyone wants to work with me on it, please hit me up. Because I'm not quite executing on it just yet. But here's the idea, and I think the world needs this. So whether it's me or someone else takes the idea, great. But I'm calling it a blue collar incubation platform. And the way I conceive of it is there are tons of blue collar workers out there that know how to fulfill the work. They know they're HVAC people, they're plumbing people. They know how to fulfill the services aspect of it to make the customer happy, right? To actually turn the wrench and do that job.
Yeah.
And many of them have in their heart that they want to be an entrepreneur. They want to be a business owner because they know that's the way to true wealth. Being a
Mhm.
W-2 in someone else's company, you're never really going to get there. You're not going to create true wealth for your family. And with a lot of people have written about the silver tsunami, right? All these baby boomers are retiring. There's no one to, step into their businesses. So
Mhm.
instead of doing the traditional private equity, like, hey, let's go buy that existing business, this platform helps you incubate from ground up. So if you're a really entrepreneurial minded blue collar worker, but you just don't know how to do the white collar aspects of launching your business, this platform will do all that for you. It'll do the
Very cool.
legal, the accounting, the help you.
Is it a course or a coaching series? What is it exactly? Or that
Well,
you're
no, I
thinking
didn't.
of?
I didn't conceive of it like that. Honestly, I
Okay.
think some of that kind of is a little bit cheesy. No offense to the people
No,
doing
I
it.
agree. I agree.
To me, it's more like, no, we are bolted on. Like you're in the driver's seat, but we're shotgun with you.
Okay.
We're actually helping you launch this business. We're helping you with client development. We're doing the LLC setup. So we have a platform that's almost like a fractional service. It's a bit like a franchise model, but it's got important differentiators from the franchise model. So essentially, these people that use the platform, they'll earn into more ownership of the business that they help launch and build over
Okay.
time. Yeah, it's
Okay. So if it isn't fully fleshed out and you don't want to, go down, I have a lot of questions that I would love to ask. Do you want to go down that trail or do you want to continue going down multifamily?
you know what this is why I know it's kind of a good idea because every time I put it out there, people respond this way. They're like, you know
Yeah.
what, this needs to happen. How are you gonna do this? How are you gonna do that? So I'm
People
happy.
need
Let's double.
paths to build wealth.
Yeah,
Absolutely.
yeah. No, let's double click.
Personal ownership, personal acquisition is how you build a wealthy society, a wealthy family, a wealthy, individual and community. And it's
Totally.
needed.
Yeah, feel
Uh,
free to ask questions. It'll help
okay.
me refine my thinking.
So what I think I understood there is that your platform will set up the LLC for them and then they earn ownership within it. Did I get that right?
100%. Yes.
Okay.
That's the way I'm conceiving it is that,
Okay.
day one, you own 0% of the LLC. And then as you succeed with certain hurdles, you're going to earn 10% of the LLC, then 20, then maybe up to 80%. So, but you never have control of what we do with that entity, if that makes
Hmm.
sense. So let's just say we're phenomenally successful. We have 10 plumbing companies. They're all at $1 million of EBITDA.
Hmm.
One day we wake up and we decide to internally roll those up to create a new a $10 million
Hmm.
EBITDA company. Well, you can't, there's no like voting rights that these people would have. They would just get dragged along because
Hmm.
we would do it because it's good for them as well. Um, and so this platform can, it can become an internally a financial or private equity type play. At first, it's a very operationally heavy play, right? It's helping to build businesses. And then eventually you can bring in this financial layer. So it's
Are the businesses that are started from scratch, or are they, smaller businesses that you acquire, then you're bringing the operator into it?
good question. The way I conceived of it is that straight from scratch.
Okay.
You have to identify the key is the human capital, the
Gotcha.
person
Gotcha. Okay. So you've
that
got to have a human capital vetting process there. How
yeah.
do you couldn't just take anybody into that sort of program? How do you
No,
vet them?
well, another good question. In my view, you need the cream of the crop. You need to be ultra selective, maybe like less than a 1% of people who eventually would apply and pitch us to work with the platform.
Uh-huh.
But I would say a couple of different ideas I have is look to vocational schools is one idea. And these could be young people as well. Look, I've seen young people succeed tremendously. And as long as they're offered opportunity and they want to light the world on fire, I've been there myself when people are like, "Oh, you're too young to do such and such," and that to me was just wood for the fire. Like,
Hmm.
boom, I'm just going to burn brighter. And So that's one thing is like you take the cream of the crop, the most entrepreneurial folks coming out of vocational school, or you kind of find someone who's trapped as a foreman in an existing company. That person knows how to lead teams, fulfill the
Mhm.
work, and you kind of poach them out of there and say, hey, you know what, you should be an owner. You know,
How do you decide what businesses you want to be in? Are you? I assume you've defined probably a buy box, basically, for lack of a better
yeah,
term, for
yeah,
what
yeah.
business you want to be in. How do you?
Uh, my idea there is to start with anything that serves multifamily apartments, the industry,
I
because
like that.
then I can leverage my network for client development. And I just
Yeah.
understand it better. And I can advise them better and say, hey, here's actually how you sell to these groups because I've been a buyer of on behalf of the company, tens of millions of dollars of services, whether it's CapEx or OpEx.
Yeah.
So
Absolutely. That's
yeah,
so I think that's brilliant. I mean, you're leveraging your pre-existing network. You're creating a structure where you're going to be building auxiliary and complementary businesses. You're going to be empowering people in doing that and finding people that have talent already in those businesses. That's wonderful. Are
yeah.
are are you looking to finance it all yourself, or are you bringing in investors, maybe a couple of key investors, or are you doing, larger kind of syndication investment style? What's your investment model there?
That's a great question. And by the way, I'm glad you tapped on the mission. I mean, it's a total missionary play. And I
Yeah.
do think that someone needs to serve blue collar types and help them rise up because there's so many great people out there. I mean, my dad was a blue collar worker. He was a painter and in this New York City. So um, yeah, I think a lot of people just need to have that support behind them to figure out the other side of how to do a company. But the way I would uh, get it off the ground, yes, there's two different ways I could conceive of doing it. One is you take some capital and then the person or group invests in the platform and they own part of the entire platform. So anything that gets launched with this platform, they own a piece of that upside, more traditional um, investment partner there. Or, it'd be great to just get one person going and make it super successful and kind of just like take the working capital and paying that person a base salary. I would just take that on myself and just not take any external capital and
Hmm.
just proof of concept it until it's so big that you know I can't finance it myself, and then
Hmm.
I would go out and take it and
Okay.
and then more existing already. It's kind of a different sale. So you know what I mean? Like one sale is like, hey, help me create this out of nothing, and then another sale is to external partners would be this is already going. Like one or two have already been super successful, and here's how we can do it for 20 people instead of two.
Right.
You know,
Right. Is this what you're planning on focusing on pretty much exclusively in 2025, or are you also still engaging in, multifamily acquisitions or other types of asset acquisitions?
you know, I don't know. You've been through a career transition yourself here,
Yeah.
and it seems very successful. So congrats on what you built here coming out of Intel. It's awesome. But to me, it's like, you know, and by the way, if anyone has career transition stuff that they want to talk to me about, I'm all ears because I learn more as I'm
It is
talking.
not easy.
No, it's not, and so I love this idea, but I'm hesitant to go all in on it because I'm exploring so many other really
Yeah.
great opportunities too. So it's like, and I know my style is once I say yes to something, I'm going to go really, really deep and hardcore into it. So before I really do it, I want to really make sure I've talked to smart people and they're poking holes in my idea, and
Hmm.
I'm writing a better business plan around it. I have a business plan I just wrote. Just
Hmm.
I think distilling your thoughts in writing is very important. So
Okay.
I'm not quite ready to just say I'm all in on this one, but as I close down other opportunities and
Got it.
this one keeps percolating, and then we'll see.
And it touches that part that I think so many of us need, and that is really having a mission. Like,
Mhm.
serving an underserved group of people and helping them step up, um, improving people's lives is really, once you get to any sort of bit. I mean, you were a CEO, or you
Yeah.
still are. You know this. You have to have a drive and a mission. Otherwise, your business is not going to succeed. It'll peter out when you peter out.
Right. Right.
And So I like that. I like your mission there. I think it's one that a lot of people could identify with.
Yeah, for anyone out there, I mean, if you're first of all, if you're mission driven and you're working on something that's in your mission, and then you also are playing to your passions, which would probably be the case if you work on a mission you care about, but that's going to get you working so much harder every day, and it won't even barely feel like work. That's a key to success, I think, is like when you're in that zone, you want to stay in that zone. And when you're not in that zone, you want to kind of run away from that type of work that you just don't like. You're not excited by it. And because you're not going to succeed.
Yeah.
So,
Yeah. All right, Dan, how can the Alternative Investing Club, if you want people to get in contact with you, I don't know if you do or don't, but if you do, how can the Alternative Investing Club get in touch with you?
yeah, I do want some people
Okay.
to reach out. It'd be great. I've always given out my cell phone number, so feel free to text me and we'll happy to hop on a call. It's 845-629-1808. And then LinkedIn's great. Daniel French. I think I'm easy to find there.
Yeah, let me make sure that I've linked you there, because when I put this audio out and video out right here, I'm gonna make sure that I promote you.
Yeah, please do. DFrenchCRE, like commercial real estate at gmail.com is my other
Okay.
new email. So that works great too. Any of those is great.
Excellent. Oh, I'm not connected with you. Sending a connection now.
Oh, wonderful. There you go. The Dans have to stick together.
Yeah, yeah.
Yeah.
I actually have a running joke about Dan sticking together, and it's totally off topic, but I started a Facebook group that was exclusively for Daniel Homlins. And it's me and like four guys in Sweden, and I don't understand what they're saying because it's in Swedish. Anyway.
No way. Yeah.
So,
Now you have to go and meet them. I mean, you can't
I
just
know.
do
I
that.
know.
Yeah, you have to go to Sweden.
Dan, it's been a pleasure getting to know you. I love that you have a mission-driven idea here, and that you were part of such a successful multifamily business, acquiring and building a $2 billion worth of AUM is incredible. I
Thank
mean,
you.
frankly, there are very few success stories like that, and
Mhm.
so congratulations on that. We'll definitely invite you in to be one of our Friday speakers. So we're
Cool.
looking forward to hearing you there.
I look
All
forward
right.
to it. Thank you.
Talk to you later.
Talk soon.
And